what we were discussing, that was the concept of the cost of goods sold. Up to now, what we have calculated the concept that what is the total manufacturing cost. In the previous lectures, we have discussed the direct material cost is how much, that is 35,000. Direct labor cost is 25,000. The total factory overhead is how much, that is 90,000. So we calculated also the cost per unit and also how they are calculating the price per unit, or they are estimating the price per unit. Now we will continue with the next thing, that is the concept of the work in progress and the concept of the finished goods. As a simple example, we just consider that there is a company which is manufacturing the fruit juice. Let's say the orange juice factory is there. So what they are producing the orange juice in the bottles or in the packs. Now the raw material, the basic raw material what they need is the oranges. This will be considered as the basic material or the raw material. And what will be the finished goods they want, or what will be the end product for them? This is what, this is the packed juice. So obviously the orange juice is there, so in the packs or in the bottle. So this is what, this is the end product. So they started with the raw oranges, they extracted the juice, then they added some of the sugar, maybe water, maybe colors, maybe flavors or other chemicals to preserve it. Then they packed it, they mixed it, they packed it, and then they finished the product. So the end product is the juice pack. It may be in the bottle or in the Tetra pack. So this is the finished product. But there is a possibility that during the financial period they have started, let's say 10,000, 20,000, 30,000 for the packs. So but at the end of the year or the end of the financial period, all will not be finished. There will be some semi-finished goods, or what we say the work in progress. So the work in progress or the semi-finished goods is what that is started, which is not a raw material, and again which is not a end product, but it is still in process. They are working on it, they are still in process. So it means work in process or the semi-finished goods means what, that may be a juice. The raw material was the orange, the finished product was the juice pack, but it is that juice which they have extracted, so it is not in a saleable position, so they cannot sell it. And it is again not a raw material, so it is not a finished goods, it is not a raw material, it is in the semi-finished goods that cannot be sold. It is unfinished goods, or simply say the semi-finished goods. Now it is mixed with the sugar, it is mixed with a different type of the colors, or it may be the flavors, the water. So they have a mixture. All this liquid is available, the mixture in the taxi it's available, but still it is not packed. So that will be called as what, as the semi-finished goods. We have calculated the 90,000 was the total manufacturing cost, which include the material cost, the labor cost, the overhead cost. Now the total cost is there. Now we will see that at the end of this month, at the end of this financial period, how much is the finished goods, how much is the work in process. Any work in process which was available at the start of this period, that will be added. So any work in process, the opening stock work in process will be added, and any work in process closing stock will be deducted, or it will be subtracted. So let's assume the cost of goods sold, what we are calculating in that statement, we have already calculated the total manufacturing cost. So that is how much, 90,000. Let's say they have a 25,000 of the work in process opening stock, and at the end of this period, what they have the 35,000 as the closing stock. So opening stock, same like a opening stock raw material, and the closing stock raw material plus minus is there. So we add that 125,000 and less the work in process closing stock. So what we get the 80,000. So this is what, this is cost of goods manufactured, means the product which are manufactured, the cost of those units or the cost of those products is how much, that is 80,000. So if we look at the wording so you can easily understand. This is what? This is the manufacturing cost and this is the manufactured. Means here still the process is there. They are producing the goods. They are producing the end product, but it is not yet finished. But here it is completed. No, the goods which are finished, which are manufactured, the cost is how much? That is 80,000. So now the next thing is what? Again, at the end of the month, at the end of the financial period, they have produced goods, but it is not possible all the goods they sell. There will be some finished goods available which they have produced but still unsold, that is available unsold stock with them. So the finished goods opening stock may be available at the start of the period. At the same thing, at the end of the period or at the end of the financial year, they may have some unsold stock which was produced during the year, but still they are unable to sell. So that will be the finished goods stock, closing stock. So we have an opening stock of the finished goods and we have a finished goods closing stock. So if we plus minus, that will be cost of goods sold. Mean during that period, the number of units which they have sold, the cost of those units is how much? That is 60,000. We assume that the opening stock finished goods is value of 20,000 and the closing stock finished goods is a value of 40,000. So in the 80,000 we added 20,000 and subtracted 40,000. So the cost of goods sold, it is how much? That is 60,000. So during that period, the number of units which they have produced and they have sold. So here it is only produced, only manufactured, but here the cost of the units which are already produced and sold, so the cost is 60,000. In this way we have completed the cost of goods sold statement. So the cost of goods sold statement started with what? With the cost of the material. Then we added the labor cost, we added the factory overhead, we got the total manufacturing cost. Then we have a work in process, opening and closing. So what is the work in process? The semi-finished goods, means which is started but still not finished. At the end of the period we have some stock. At the start of the period we had some stock. So we plus minus that, or we have added or deducted or subtracted that value. So it may be opening stock added and the closing stock is deducted or subtracted, that we get the cost of goods manufactured. Then again there are finished goods which are produced but the business is unable to sell them. So the finished goods are also added. The closing stock is subtracted. So we get the cost of goods sold at the actual. So why we are using the word actual here? Because there are some other adjustments are there with respect to the factory overhead, because factory overhead value of 30,000 is not just one value. It's a combination of maybe 100, 200, 300, 350, any different costs that we have added, and then we have calculated this 30,000. But this value is the actual one, but normally it is not possible to calculate the actual cost because there are so many accrued expenses are there. So they are still pending. We are unable to calculate it at the end of every month. So that's why normally we calculate at the estimated value. But here we assume that we know the factory overhead actual cost. That's why we have calculated cost of goods sold 60,000 at the actual value. So this is the format how we are preparing the cost of goods sold statement. But still, if you have any doubt, if you have any question, you can ask me in the comment section. So we started with the total manufacturing cost. Then we have calculated the cost of goods manufactured. And then we have calculated the cost of goods sold. So this is the format of the cost of goods sold statement for the manufacturing or the production companies. I hope you have understood that thing. Thank you very much.